why don't we go ladies first here and introduce yourself, Lisa, and then we'll go down the line and just, we actually are going to do this as a speed panel, which is different than kind of a back and forth. It's kind of going to give you time to introduce yourself, provide your perspective, if you want to mention the name of your firm, et cetera, where you're based out of, what your investment focus is, what you'd like to source from the room, and then the $1 million insight you want to provide to the room. And if you need any help getting through all those 5 bullet points, just let me know.
All at one time. Okay.
Yeah, in 5 minutes. So not all in 1 minute, but yeah, take your time.
I guess I better have the notes. Okay, so hi everyone. We're based out of New York and Miami. I really do need to see the questions. Oh, these aren't the questions. Okay, so our investment focus, we do later stage venture. We're sector agnostic. I guess it's easier to say what we don't invest in more than what we invest in. We don't do real estate and we don't do funds. Everything else we pretty much look at. We are fairly heavy in biotech and life science, but we also do consumer, energy. Now we're even dipping into crypto, which is not my favorite. Let's see, what's the next question? Preferred investment structures. We're straight up equity investors, typically. Types of investments we're looking for. Okay, later stage venture, pre-IPO is always interesting. We want to see traction, we want to see revenue. And then for me personally, I'm an Earthshot Prize nominator, so I'm always interested in innovative technologies, climate tech, anything ESG focused that might be interesting to nominate. So on the earlier side, I would personally look at that. On the family side, we're looking for later stage opportunities that we see having a potential IPO within about 2 years time frame. And last but not least, my number one most valuable insight. Well, I guess get the notes before you come on stage. I would say invest in what you understand and what you know. I think that too many people chase after the latest, greatest thing. I've seen families run around like little kids playing soccer in a pack. You know, it was like, oh, SPACs. No SPACs. And then it was EV, and then it was blockchain, crypto, Web3, and now it's AI. Not that any of those are bad. But if you're a serious investor, know what you're investing in, have some expertise, don't just chase the latest and greatest.
Right, great.
Under 5 minutes, and be quick.
Way under 5 minutes. So I've got a follow-up question. For venture capital and angel investing, early stage investing, it is a lot harder to gauge who to trust when you can't look at, oh, they have $1 million in EBITDA or $2 million EBITDA, or they've been in business for 17 years and this many employees. To me, that seems like very tough, but you've done it over and over again. So what are some like inside baseball secrets that you could share with families here who have an interest in that area and they don't want to lose their money every time and could learn from you? Bless you.
Bless you. Not sure it's inside baseball as much as common sense. I think the management team, the founder, you really have to understand your business, and you have to be able to translate that understanding quickly. I can't tell you how many times we've seen a good product or a good technology, and we know immediately the company is not going to work because the founder or the management team is not solid. Something disruptive. You want to look at something that might have a real potential to do something that no one else is doing. If you are going to be looking at something that is already out there and there's a lot of it, then you'd better have something that's the reason why your company is going to do a better job of it than what already exists. So I would say, first and foremost, jockey, not horse. You've got to trust the team. I always ask my founders a series of questions, and one of those questions is, what do you see as the biggest potential problem for your business? And if they answer with like raising capital, it should be something that's real. I ended up investing in a company that I wasn't even particularly interested in, and when the founder answered the question that I asked, and she said, the physical and mental health of my team, because if they're not strong, we're not going to make it. And I immediately knew that this was a founder that understood how to actually grow a business. Everybody can lead with, the total addressable market is $5 quadrillion, and we're going to go from negative 10,000 this year to $20 million next year with absolutely no way to get there. That stuff is just ridiculous. I want somebody realistic. I want someone that can come to me and say, look, this is what we've got. Realistically, it's going to take us this long to get there. This is our plan to get there. This is why we're the ones to do it. If you can answer that, then you're worth looking at. Otherwise, you're a science project or a dreamer or a flipper. You know, if somebody comes to me and says, here's my plan to get out of the business before I've even built it, I immediately think, like, you're not even interested in growing your own company.
Right.
So if I wanted to do that, I could just bet on a lot of funds that can quickly exit for me. So that's
right. Right. Like Bezos says he wants like a missionary, someone who's going to champion something, not a mercenary who's just kind of in and out real quick. So I find, because I'm not a VC expert, it's not an area I focus on, but I don't know if I've seen too many pitch decks or any pitch decks in VC that do look realistic to me as a non-VC person. They're almost all crazy hockey stick right after investment. What percent do you think are really realistic, or do you see them all as super rosy? No one ever puts a bad one or a bad scenario out.
Yeah,
right?
You never see a deck that doesn't go like this,
right.
in the chart of growth. I would say, obviously, it depends on the stage. If they're a little bit later stage, they actually do have revenue or traction and they can
right.
show. If not, I want to see a realistic timeline. And yeah, if you're telling me that you can go from 0 to $50 million in a year, I'd like to know where the drugs are that you have, and can I have some? Because I think it's just insane. Unless you're like a really, really well-known person that people are going to throw money at before you do anything just because you're you, right?
right.
If somebody's like, oh, well, Sam Altman is in this, and so we're going to give him $100 billion, that's different, but that's not usually what I get into.
Right. Great, awesome. Well, one note I wrote down here is that the founder matters more perhaps than the opportunity. Because if it's the opposite, like, it doesn't really matter what the opportunity is if you don't like the founder, right? So awesome. Appreciate you sharing that. David, why don't we have you go next and go through some of the same questions?
I'm a multi-family office CFO. I work in a lot of capacities for families, helping them out just on basic accounting, to being a controller, to really helping them manage a lot of the family dynamics and making a lot of decisions on their behalf. What's really interesting about this position is I'm not necessarily sourcing any deals for them, but you're standing right beside them as they're operating throughout their financial life. And you become this person that's almost this financial therapist for them, where you're, helping them make decisions with their family and how they're communicating issues. And with that, I've really had the pleasure of seeing a lot of different families doing a lot of different things. I've seen folks who have made a lot of money in the stock market. I've seen them do it in options and commodities. I've seen people make a lot of money in real estate. I've seen it in alternatives and private equity and venture capital. And so seeing all these has just been honestly a privilege. And what I see is once the money is made, oftentimes people take a couple different routes. Some folks, depending on what their horizon is for their family, they may decide to keep it very, very simple. I've seen folks just put investments in, 7 index funds, and that is where they go. Other families who may want to grow, they're continuing to invest in private equity and real estate and diversification in that regard. And so some of the investment structures that I'm seeing, specifically from the family side, if they're trying to transfer the wealth, I see folks using a lot of family limited partnerships where they can use a lot of gifting strategies and that, where they can also get synergies with the family members, maybe getting into a deal that they couldn't do individually. So they get some of that family buying power, if you will, and then that is able to alleviate some of the administration that goes on managing that asset and the communication. They may have one point of contact or somebody in the family office who's doing that. And so I'd say the most valuable $1 million insight that I've learned is really know your audience and know the family that you're talking with. Sometimes there's a lot going on inside the family, and to be able to educate them and help everybody understand what type of investment you're getting into. There may be a lot of opinions in the background as to why you're doing that, and the family may not even be clear on what they want to invest into. So I think it's really important that you're very, very patient with them and understanding that they're juggling a lot of things on their end as well. And this may or may not be the right investment, but also lead with education too. And that people are curious, people want to learn, and helping them understand that is ultimately helping both parties out in that regard.
Great. Yeah, you mentioned some valuable things. I saw a survey of institutional investors, which I think source ideas on LinkedIn, we could probably all agree, less than a family office would. And it said that 30% of institutional allocators are influenced by and read content and white papers, et cetera, through LinkedIn. So I think the percentage of family offices that do is probably 50% or higher. And you talked about education. I think also being patient, being politely patient and following up and persistent, but also sometimes people complain if they meet with a son or a daughter of a family and they're like, oh, you're not the decision maker. Wish you told me that up front. What a waste of time. But it might be worth a $50 million or $100 million net worth family, and they're just not respecting that process of being patient and building the trust. So I'd like you to comment, because we have another minute left here. For those in the audience who are trying to build the trust with the exact families that you work with and represent, et cetera, what do you see works in building the trust besides education and being patient? Because a lot of people who, if you speak at an event or you have a LinkedIn profile and say you're an investor, you're going to get approached hundreds of times a day, a week, a month. So what makes the difference? Who gets through and who earns their trust at the end of the day?
Yeah, I think first is understanding what they're passionate about. Think about, on one side of the coin, which side are you on if you're trying to raise money and there is no passion for that? You move on, right? Respect their time. If they're interested in tax advantages, then it's like understanding what it is that they want is very, very helpful. And then just not looking at them like an object. Money is only a magnifier for who we all are. And the more money that you have, it really magnifies that personality or that trait of who you are. So they're just human beings, and everybody puts their pants on one leg at a time.
Right, great. Thank you. Good timing. Kevin, thanks for coming back. Do you want to introduce yourself and a little bit on your perspective, preferred structures, et cetera? Kevin, yes.
Hi, everybody. Richard, thank you for this opportunity. Thank you for this opportunity.
No problem.
And I'm really happy to tell you a little bit about our family and what we do. We're an old stage family office. We've been around 20 years, which is relatively new and relatively old in a lot of senses. What we do is we have an internal motto: catch the current, make the wave. And so what we do is we take early stage technologies and we roll them out around the world. We've done business in 80 countries. And we still do business in probably 40, 45 of them through family offices and not through politicians. Politicians come and go. Family offices stick around. And particularly foreign family offices stick around for generations after generations. We really like patented technologies because when you own the patent, you own the real estate. And then you lease it out, you license it out, whatever. And a lot of people don't understand how powerful a patent is. Early in my career, I met the two doctors who were about to get the patents on alpha hydroxy acids. The women in the audience would probably would know all about it, and the men wouldn't. It's the wrinkle cream, retinols and AHAs. The people who are in charge of retinols, Johnson & Johnson, brought me into these people and said, we've got a conflict. They need a pit bull lawyer businessman like you. Frankly, and I don't like the word I don't like the word but I guess my team, we brought it to 80 countries, and it was in 40% of all skin products in the world. We generated almost $500 million in royalties and sold it to Johnson & Johnson for a nice piece of change. Patents. Right now, we have a portfolio of patented technologies, and we're very, very pleased with that. And to be honest with you, people come to my son and myself and my team and say, I've got a patent, but I need you to monetize it and help us strategize it all over the world. So example, those AirPods with Apple, we own the patents. Apple's aware of us, et cetera, and we'll work on it. We also own the patents in all skincare and cannabis, CBD, et cetera. We also own all the patents on refrigerant gas, which reduces your electrical bill by 20 to 40%, and all you do is take 2 to 4 hours to replace it. We're in 150 installations in the United States, and my job is to bring it international. I have teams in 14 countries in South America. I'm now working in Europe, et cetera. But that's what we do, is we create joint ventures with very wealthy, very successful, but most of all, operations-oriented, penetration-oriented family offices. We make them our joint venture partners, and then we work in the trenches in each country. And so we're building patent portfolios. The two that I'm most proud of are the refrigerants, and I love all the patents, but one that I have to show you because it's crazy, and one of the principles is out there. And Camille, you're in the audience someplace. You laughed when I brought this out.
I am here, Kevin.
There you are. That, you can eat it. It's water soluble. We are now a preferred provider to Walmart, and now we just got to deal with Subway. But this is not recyclable plastic. It's made from sugar cane waste, which is all over the place, and it is totally and 100% soluble. So you put it in your refrigerator, in your washing machine, et cetera, and it's gone. This will, in our hope and our prayers, and we are already talking to people all over the world, will replace plastics. So that's what we do. So what's our structure, you ask? I teach at Cornell and Stanford. I taught a full course for 16 years at Cornell on 2 weekends every spring. I say when you have a patent, and MIT, and when you have a patent technology, you create a grid. What are your products across the top? How many different products or applications do you have? And how many channels of distribution do you have? In AHAs, I had 35 boxes to fill. So what I did is I went to Avon, and I said, you can have one box, glycolic acid, door to door. And I said, I need $25 million as a paid up license. And in those days, that was a lot of money, okay? And they didn't give us $25 million. They gave us 22. We never raised another penny of capital. It was organically generating capital. So what we do is we monetize patents, but we build the investment portfolio in a non-dilutive way. And we also do straight investments, Richard. So we have probably a couple dozen companies. We're in rare earth mining in Montana, et cetera, and Vietnam. Vietnam's number 2 to China in rare earth. So we're very diversified, but we prefer patents. And our target, as I said, is patents and bringing it into our global network in Asia, South America, Europe, Middle East. But what is our insight? Is it a fad or is it a trend? And can we make it a trend? Catch the current, make the wave. Can we truly make it a wave? And we don't want to be involved in a wave when it's about to crash on shore. We have no interest in being Me Too's. My son laughs at me, Dad, you go to all these family office places. I stay. He created Rise Cold Brew Coffee. He's so much more creative than me. My two partners, we created Sobe Beverages, fastest growing beverage company ever. We are a great combo. He's creative, but I got to tell you something, Richard. When I meet an entrepreneur and I try to be nice and et cetera and kind and all that stuff, you better know your numbers. If a CEO says to me, gee, talk to my chief financial officer, because I'm not sure what I've done this past month or this past quarter, we move on. If you don't know your numbers, you don't know your business. Because the key to business as well as personal relationships is pattern recognition, Richard.
Right.
Pattern recognition. Good pattern, pump it. Bad pattern, correct it fast.
Awesome. So much value right there. We talk about a lot as a team. If something's not working well, we fix it like the same day we realize that it's not working. Tillman Fertitta has a book called Shut Up and Listen. He owns the Houston Rockets. He's a billionaire, and one of the top 7 things that he stresses is you have to know your numbers or you're dead. There's no way to operate without knowing your numbers. So that's amazing. And I don't think it came up on the digital asset panel just because of who was on the panel. It wasn't what they were focused on, but digital assets is like real estate. And a lot of people don't see that, the spatial, occupation of certain areas. And then if others encroach in that territory, they have to pay you a licensing fee, et cetera.
Data is value.
Data is value. Yeah. Awesome. Yeah. Data became worth more than oil like a decade ago, right? So,
one more thing. Missionaries and mercenaries.
Right.
You want to invest in missionaries, right?
Right, yeah. And probably there's not a single person in this room that loves the fact that they use any plastic. So that's like one of the coolest ideas I've seen at our events for a while. So appreciate you being here, Kevin, and thanks for speaking again at the event. Awesome. Donald, you want to wrap us up and share your 5 minutes?
Absolutely. Thank you for having me, Richard. And it's great to be here with esteemed colleagues such as yourselves, learning more about patents as well. So that's really cool. We're a single family office for a Latin American family. I started my career at JP Morgan here in the city, so it's very close and dear to my heart. And essentially, the family plucked me out and gave me an interesting opportunity. I was ready to do something that was more creative, and it had more degrees of freedom, which this family office has let me to do. And essentially, we invest in a broadly diversified multi-asset class portfolio. Within public investments, we have equities, we have active managers, passive strategies, and I think we have a meeting with Dan Pinkerton after that, so I'm excited to talk to him about that. But something that's been interesting that I've worked on specifically for this family, and it's something that's more in-house. I really had the idea last year to create a strategy that was proprietary, that was in-house, that was differentiated. And like Kevin mentioned, pattern recognition and data is very important. So I started doing back tests to determine what could generate additional alpha or outperformance in the long run through different cycles compared to just investing directly in indices such as the S&P 500 or the NASDAQ. And so I ran back tests, kind of became obsessed with determining what would have happened if I would have gone the fastest growing sales companies or earnings growth or filtering for liquidity or momentum. And I kind of started building a formula which we now use internally since December 1st of last year. We're up about 45% year to date, and we're happy with the results and hoping to grow that even further. But that's just one of the areas that we invest in. The family's also heavily involved in real estate, direct. We don't really go through funds, although always happy to open to review opportunities. And we have so many sponsors here and great opportunities as well, so I'm excited to speak with some of you all. Investment structures, in terms of preference, we are offshore investors, so if there are offshore feeders available or certain offshore-friendly investment structures, that's where we would normally invest in. And when it's in real estate, we tend to, the principal likes to have full control of the building or the project for clear reasons. And I guess if I would have an investment advice or some valuable business advice for you all, it would have to be, for me personally, being creative and also combining that with a passion for just iterating and improving and constantly questioning your own original thesis. It leads you to create something that's unprecedented and sometimes really interesting. You just don't settle for less, and you keep constantly iterating and improving and use data and resources to your advantage. I think nowadays, ChatGPT was mentioned, but there's just such a vast amount of resources and data out there that if you just can separate the noise from the signals and identify it and take advantage of it and ride the trends and obviously avoid pitfalls, I think you can really create a strategy that's well structured and solid and great for the long term.
Great. And if there was like one or two really specific niches, like when you meet with your team, like, hey, make sure you keep an eye out for this in this state or this in this country, is there like one or two things you could?
Sure, absolutely. Something that we've been looking at, we have certain buckets to fill within our strategic asset allocation. And I know private credit has been all the rage. We would be very selective in terms of the manager, would like to see a long track record, but essentially being able to get some, interesting yields, something that's been kind of tried and true, well tested over time, a manager that has had experience through different cycles. That's probably something that we would be looking at on a selective basis.
Okay, great. And then last question for you is that, with all the hundreds of LinkedIn messages and emails you get, what makes it past the filter when you don't have time to read an essay-long email and you're trying to figure out who's the credible, creative founder and all the things you just talked about?
Sure, that's a great question. I think when it's referred by someone that I know, perhaps a common connection, not just kind of a blast where you could be hundreds of people could be receiving this, but instead something where it comes out of personal connection. Perhaps you both attended the same university, or you both have mutual connections in LinkedIn, or you attend the same event. So I think that would help.
Right, yeah, for sure. I got an email the other day that had the wrong name on the email to me with someone I haven't met, like in a different part of the country, and it said like, oh yeah, your name came up twice over lunch today from my colleague, and it's like this fake reference, or like, oh, you're at the same event as us last week in Monaco. I was like, for sure I wasn't in Monaco last week. It was always lots of like people
That's
pretending to have something. Yeah, big red flag. It happens a lot in our industry, people trying to kind of fake a affiliation of some way. Anyone else on the panel that wants to add something that you wrote down and you'd love to share with the audience, or you thought of while the other panelists are speaking? Yeah, Kevin.
Can I just say something about valuations? Entrepreneurs they have a disease, and it's overvalue their technology. And you want to create a staircase in your company, and that means up in valuations, not down. And the original investors should be, at least partially, your second and third round investors, at least you hope they are. And when you tell investors that you raised money on 10 million, but now we're at 5 million or 150, they feel down because they feel like they lost money. And the second part of that valuation game is don't drink your Kool-Aid. Okay? Just because you raise money on a $20 million valuation and you got $1 million of friends and fools and whoever to put money in your company does not mean that you're worth $20 million. And too many young entrepreneurs start gloating and they tell their wives, their whoever in their life, that they're now a multi-millionaire when they don't have anything until they close that deal and finally sell a company, go IPO or whatever venting there is for cash flow. So don't drink your Kool-Aid, and make sure you have realistic valuations so you reward the good investors that you bring on early.
I think that's so spot on. Like Kevin O'Leary countless times on Shark Tank is like, I don't care if you did an $8 million friends and family. Welcome to the Shark Tank. You know, I think you should take it out behind the barn and shoot the thing. You know, it's worth nothing. So he'll be pretty straight with people on exactly that point. Were you going to add something, Lisa?
Yeah, I'd say skin in the game. We want to see that somebody has also invested themselves. Now, if they don't have money to invest, that skin in the game can be they're not taking a salary. They're working full time. They've mortgaged their house. But I want to know that that person is every bit as invested in this company as we are in terms of shared risk. So I would look at that. And then just one comment. People do always say, you know, how do you get deals? And of course, there is a network of people and that you trust, but I do think that one of the issues for getting capital to women and getting capital to people of color is that they don't have the right network sometimes, and so they're not in that shared, trusted community. And so what I'd say to the investors out there is like, invite somebody into the room, allow them to get to know somebody so that they can become trusted, because not everyone is born with friends and family that can write checks. And it's unfair if we, as investors, only look at the people that our friends from Wharton refer. That will never change it. So that's my little lecture.
Awesome. Yeah, I live in a house with 5 females, 3 daughters, mother-in-law, and my wife, lots of Taylor Swift fans, and we have more than 50% of our staff is female. We try to go out of our way to get amazing female family office executives on stage. So if anyone has references, they don't have to be a family office, just an investor or someone who runs an investor club, that'd be amazing. But also for investors here in the room, if you'd like to bring your spouse, your son, your daughter, and leverage our platform to groom the next generation, the ideas that get exposed to here could put off a light bulb, like, oh, working in investments doesn't mean I have to sit and calculate numbers in a spreadsheet and sit for my CFA for 7 years and study textbooks and formulas. Like, there's a lot more to the investment industry, relationship building, finding exciting technologies, and it could open up their idea in their mind. They might think, I want to be a teacher, I want to be a teacher. Nothing wrong with that. It's amazing to be teachers. We need great teachers. But you could be a teacher in the IP industry. You could be a teacher to family offices,
Can I give you one line?
Yeah.
Pillow partners will make or break your business. Make sure that you get to know the pillow partners and make sure you respect and make sure they know what you're doing and why you're doing it and how their spouse or whatever is a very important part of your company. Pillow partners will make or break your business.
One billionaire recently told me that who you spend your life with is more important than how you spend your life. So that was a pretty good quote. All right, let's give our panelists a big round of applause. I think that was great. If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.